Begin, though, with our talk of the tape, the market's Powell problem. The Fed chair speaking tomorrow in his last remarks before next month's key meeting on interest rates. Does he clear an end-of-the-year rally for takeoff, or does he ground it? Let's ask Joe Terranova, Virtus Investment Partners Chief Investment Strategist, CNBC contributor. He's here with me at Post 9. I mean, that's the reason why we haven't really done all that much, right? It's all about Powell. We need to hear what he's going to say tomorrow.
Yeah, kind of running in place today. The problem will be if he actually turns the speech over to James Bullard and lets Bullard deliver the speech. That's the problem for the market.
You mean if he's too hawkish?
Yeah, I mean, if he basically stands up there and delivers exactly what Bullard's been talking about, I don't expect that to occur. I think he's basically going to comfortably deliver to the market what the actual expectation is.
Comfortably? That's an interesting word of choice there. So. Comfortably?
I think we're going to get that finally. I think he's going to deliver that. I think he's going to remove some of the volatility in his prior remarks. I do have that expectation tomorrow. Does that ultimately mean that stocks lift from here? Potentially. I think they could.
Well, I mean, today, if you're right that he's somewhat soothing, that's what you're leading me to believe you're saying, then why wouldn't the market take off?
Need confirmation from the inflation report on December 13th, and then you actually need from the Federal Reserve on the 14th to hear.
Oh, you're way ahead of me. I'm thinking between now and then. I mean, let's get through the end of the year. We got 5 weeks. You're already talking to me about the middle of December? I'm trying to figure out if we can put something together between now and then.
Yes, we can. We can deliver something this week. If he gives the comforting remarks that I expect him to give tomorrow, I think the market will rally into the end of the week. I think the market was ready for that rally without the performance of Apple today. You had very strong performance from J.P. Morgan, a lot of the financial institutions, American Express, Caterpillar, Honeywell. The big names were there today. We wanted to have a blue chip rally today. Apple held it back.
All right. So the other thing, I mean, this is a real thread the needle moment in and of itself. He doesn't want to spark a crazy rally in stocks either. So maybe you're hoping for something that he's not going to deliver. It's like the market's already rallied a lot. You think he wants to see it go another 5-10% higher between now and the meeting?
No, I don't think he wants to go 5 to 10% higher. He is focused on asset price inflation. That's what the Federal Reserve, Scott, can affect. No one's talking about a 5 to 10% rally. In my view, that would be completely extreme. I think what we're talking about is let's restore the bullish momentum that we were carrying into Thanksgiving. Let's go back and try and get the market above the 200-day moving average. Let's break out above 40.50 to 40.75 and see what we can do from there. But 5 to 10%, that's unrealistic.
Well, how are we going to get any of that momentum if Apple can't get any of that momentum? You have made the case on this show and others that the market cannot rally without Apple and those mega cap stocks. And that's the one with one of the biggest questions around it, down more than 2% today.
Held the market back today.
You have that, very well followed analyst out of Asia talking about shipments being down for the phone, 15 to 20 million units.
Apple's on the defensive right now. It's very clear. It's a combination of tax loss selling. It's also a lot of institutional capital raising funds, shedding positions in the wake of what's going on in the crypto world. Apple, without a doubt, is under pressure. That can somewhat be reversed tomorrow with comforting words from Chairman Powell. If you don't get that, Apple is clearly going to be what weighs on the market.
Why is Apple so hinged on what the Fed chair says? I mean, Apple's got its own issues.
There's not a direct correlation, but you have to agree there's a sentiment effect. If there's comforting words from Powell, the market lifts. That's going to offer some relief to Apple. It's not idiosyncratic to Apple itself.
But Spoke had an interesting note on Apple, speaking of the weakest of the big tech stocks over the last 5 trading days, with a decline of near 5%. And now it's back below its 50-day moving average, right? So it's got some technical damage. It's got fundamental questions about phone delivery and what's taking place in China, whether it can overcome that. Oh, by the way, you got that new fight now with Musk and controversy about the App Store, et cetera, et cetera, et cetera. Questions that you used to not really have around this stock.
No, without a doubt. And I didn't know any of the mega caps are really that strong. I mean, look at the performance quarter to date. They're all really underperforming the S&P itself. Amazon's incredibly weak. We've seen Alphabet basically just running in place, and we certainly know what Meta's doing. So it's a challenge for the market right now not to have the participation of mega caps. I do think it's specific, as I said, tax loss selling in the near term for sure. And I think there is a correlation between what we're seeing in crypto liquidating, raising some funds on the institutional side.